All right, so you want to know if First Mining Gold is a good asymmetric investment, and it's December 2024, so a great time to be asking that question.
Yeah, definitely.
Well, we've got a ton of information here, company reports, articles, even some academic research, and we're going to deep dive into all of it, really break it down for you.
Sounds good.
So by the end, you'll know if First Mining Gold is the right investment for you or not.
Awesome.
So to get us started, what makes First Mining Gold, unique or different? What are we even looking at here?
Well, the interesting thing about First Mining Gold is that it's not actually a producing mine yet.
Okay.
They're still in the development stage, which means their value is really tied to the potential of their projects.
Got it.
Not on, any current gold production.
Right.
Their main projects are Springpole, which is in Ontario, and then Du Parquet in Quebec.
Okay.
And they also have some smaller stakes in other projects, but those are, less important for our purposes here.
Gotcha. So it's all about the potential then. And I've noticed in a lot of these sources, it seems like First Mining Gold might be undervalued by the market, especially when you compare them to other similar companies.
Yeah, absolutely. And one of the articles we have highlights that gold mining stocks in general right now are actually trading at historical lows relative to their net asset value.
Okay, so for people who aren't familiar with that term, could you maybe break down what net asset value actually means in this context?
Yeah, for sure. So net asset value basically refers to the estimated value of a company's gold reserves, minus the cost of extracting it.
Okay.
So it's kind of a key metric to look at when you're valuing mining companies.
Got it. So their potential profit.
Exactly. And these experts are saying that if you look at a lot of, the mid-tier gold miners, they could be generating free cash flow equal to 20% or more of their current market value.
Wow.
Assuming gold kind of stays at where it is today, roughly.
Okay, so even if things just stay the same, there's a lot of potential profit there.
Yeah.
And then I noticed in First Mining Gold's corporate presentation, they're reporting a price to net asset value ratio, or PNAV, of 0.1x.
Right.
That seems insanely low.
It's incredibly low, even for a company that, isn't producing yet.
Yeah.
So what that means is that they're basically trading at 1/10 of their estimated net asset value.
Oh, wow.
It's imagine being able to buy a house for 10% of what it's actually worth.
Yeah, that's a steal. But the market clearly doesn't see it that way if it's trading that low. So I guess the question is this typical for a development stage mining company, or is there something else going on here?
I mean, it is low, even for a development stage company. Now, a low PNAV could signal a few different things. It could be that the market is just overly pessimistic about the company's ability to actually develop their project successfully.
Right.
Or it could, reflect concerns about the company's management, execution risks, or maybe even doubts about the long-term price of gold.
Got it.
So we really need to look deeper to see if this low valuation is actually justified, or if it represents, a real opportunity for some asymmetric returns.
Right. And we'll get to all of that. But first, let's talk about the actual projects themselves, Springpole and Du Parquet.
Sure.
Because some of these reports really highlight the size and the quality of the deposits.
Yeah, First Mining Gold's Springpole project is massive. It's one of the largest undeveloped gold projects in Ontario.
Wow.
With probable reserves of 3.8 million ounces of gold. I mean, to kind of wrap your head around that, imagine a cube of solid gold.
Whoa, hold on. A cube of solid gold.
Yeah.
How big are we talking about?
Well, I mean, based on the current price of gold and the density, a cube containing that much gold would be roughly 12 feet on each side.
That is a huge cube of gold. And then their Du Parquet project in Quebec is also pretty substantial, right?
Absolutely. So Du Parquet has 2.6 million ounces of gold in measured, indicated, and inferred resources.
Okay, now you're throwing around terms like reserves and resources. Could you just explain that for people who don't know the difference?
Yeah, definitely. So reserves are basically deposits that have been thoroughly studied and are economically feasible to extract. Resources are potential deposits that haven't been as extensively explored.
Got it.
And might not be economically viable yet.
So Springpole is further along in the development process because it has those defined reserves.
Exactly.
Okay, but even the resource estimate for Du Parquet is still pretty huge. Right?
Oh, absolutely.
Especially when you consider the rising demand for gold and just how difficult it is to find new deposits like that.
Yeah.
So First Mining Gold, they've got these massive, potentially very valuable projects, but they're still in the development stage. So that means they're not actually generating any revenue yet.
Right. That's an important point. And it kind of leads us to like the state of the gold mining sector right now, which is actually really interesting.
Okay. Tell me more.
So we're seeing this huge surge in mergers and acquisitions.
Oh, wow.
As the larger gold producers are scrambling to try to replenish their reserves, which are, dwindling.
So are these big companies, like, specifically on the hunt for projects like Springpole and Du Parquet?
Yeah, precisely.
Wow.
Because there are, fewer and fewer of these new discoveries of, like, large, high-quality gold deposits, these big players are willing to pay a premium to acquire companies with proven assets.
Oh, okay.
So we've seen recent acquisitions go for like as much as 65% above market value.
That's huge.
Yeah.
For the people, the investors in the target company.
Exactly.
And with their projects being so big in a stable jurisdiction like Canada, it makes it seem like First Mining Gold would be a prime target.
I mean, absolutely. Their projects are attractive. Their current low valuation makes them, even more appealing to a potential buyer.
Right, right. Okay, so we've got undervaluation, we've got massive projects, and we've got a hot M&A market.
Yeah.
But where does First Mining Gold fit into, like, the bigger picture of a mining company's life cycle? I remember reading about something called the Lassonde curve.
Oh, yeah.
Maybe you can explain that for us.
Yeah, the Lassonde curve is, it's basically a really great way to visualize the different stages that a mining company goes through.
Okay.
From exploration all the way to production.
Got it. So where would First Mining Gold fall in this curve?
Well, they're kind of transitioning from the development stage towards production.
Okay.
Which is kind of a crucial period because it's where companies start to move away from speculation and towards like tangible results.
Okay.
So as they get closer to actually producing gold, their value typically starts to increase significantly.
That makes sense. And looking back at their stock history, it's been pretty volatile, but it is currently trading way below its previous highs.
Yeah, definitely.
Okay.
And I mean, I'd say significantly lower than many of their peers, even those with smaller, lower grade projects.
Right. So we've got this company with potentially very valuable projects.
Yeah.
They're trading at a discount to their peers, and they're trading below their own past performance.
Yeah.
And they're in this sector that seems ripe for acquisitions.
Right.
But we also need to take into account what's going on in the gold market as a whole, right?
Yeah, absolutely. And the gold market is experiencing some, really interesting dynamics right now. You've got increasing demand from central banks.
Okay.
You've got these growing concerns about financial sanctions and geopolitical instability.
Right.
I mean, some forecasts are saying that gold could hit $3,000 an ounce by the end of 2025.
Wow. That would be a huge jump from where we are now.
It would be.
Okay.
And if that happens, First Mining Gold's projects obviously become even more valuable.
Of course, yeah.
The market might not be fully grasping like the potential impact of these really favorable trends on their future profitability.
Right, right. It sounds like there's a lot of potential, but obviously we need to look at the risks, be realistic about the risks too.
Yeah, of course.
So let's dive into their financials a little bit and see what their most recent reports are telling us.
Okay, so their latest management discussion and analysis, or, MD&A, shows that they are actively developing both Springpole and Du Parquet.
Okay.
But they are burning through cash.
Right.
Now, that's not necessarily unusual for a company in this stage.
Right.
But it is something that investors should, pay close attention to.
So they're spending a lot to get these projects going. But can they actually sustain that spending?
Well, they did recently complete a bought deal offering, which is basically where they sell a bunch of shares at a set price to raise capital.
Okay.
So this should give them, some more breathing room.
Extend their runway a bit.
Exactly. But, we need to analyze the details of the offering to really understand its full impact on their financial position.
Okay, so they got more cash, but now each share represents a smaller piece of the company.
Exactly.
It's a trade-off.
It's a trade-off. They need the money, but yeah, issuing more shares can lower the value of existing shares.
Right.
So it's a bit of a balancing act.
Right. And we can't forget that the price of gold itself, that's inherently volatile.
Right.
So even if they do manage to bring these projects online, if the price of gold tanks, that's going to impact their profitability no matter what.
Absolutely.
Yeah.
The price of gold is a major factor in any mining company's, success, but, it is considered a safe haven asset.
Right.
So, in times of, economic uncertainty, investors tend to flock to gold, which tends to drive up the price.
Right.
So, if the market tanks, gold might hold its value.
Right, or even increase.
Yeah.
Yeah.
So no guarantees, of course.
Right, of course.
But gold's historical performance suggests it can be a good hedge against inflation and market volatility.
Okay, so there are definitely some risks, but they seem manageable, I guess, especially when you consider, how big the potential rewards are.
Yeah, exactly. And I mean, the whole concept of an asymmetric investment is that the potential gains significantly outweigh the potential losses.
Right.
And in this case, with First Mining Gold, we do see several factors that seem to point to a strong possibility of asymmetry.
All right, well, let's break those factors down then.
Okay.
What makes you so confident about the asymmetry?
Sure. Well, I mean, let's start with the potential upside here.
Okay.
If First Mining Gold gets acquired, which is looking more and more likely given all this M&A activity in the gold sector.
Right.
Investors could see some, pretty substantial gains. Remember those premiums we were talking about?
Yeah, those are crazy, 65%, right?
Yeah, I mean, it could be massive, but, even if they don't get acquired,
right,
their projects are, they're progressing towards production.
Yep.
And that alone should really drive up their value.
Okay, so the potential upside is looking pretty huge, especially if, everything goes according to plan.
Right.
But let's talk about the downside for a second. What are the risks here?
Well, there's always the risk that the projects could face some unexpected delays or cost overruns.
Right.
I mean, mining is a complex business.
Yeah.
And there's always unforeseen challenges that can pop up.
Right. Especially when you're dealing with these really large scale projects like Springpole.
Exactly.
Yeah. And then on top of that, they're burning cash right now.
Yeah.
So that adds another layer of risk to the whole thing.
Right. And their financial situation is something we need to watch.
Yeah.
This bought deal offering, it helps, but it also means, dilution for existing shareholders.
Right.
We need to kind of dig into the terms of that to really understand the long-term implications for investors.
Okay. So they got more cash, but it came at a cost.
Yeah, it's a trade-off.
Yeah.
They need the money to keep developing, but it can lower the value of existing shares.
Right. And we also can't ignore the volatility of the gold market in general.
Of course.
If the price of gold drops, that's going to impact their profitability.
Yeah.
Even if they can't bring these projects online.
Absolutely. I mean, the price of gold, it's a major factor in any mining company's success.
Right.
But gold is also considered a safe haven asset, right?
Right.
So, if there's economic uncertainty, people tend to go to gold.
Yeah.
Which, drives the price up.
Right. So even if the general market takes a hit,
right,
gold might hold its value or even go up.
Exactly. There are no guarantees.
Of course.
But historically, gold has done pretty well as a hedge against inflation and volatility.
Okay, so there are risks, but they seem, I don't know, kind of manageable.
Yeah, I think so. Especially when you consider the potential rewards.
Right. And like you were saying earlier, the whole point of an asymmetric investment is that the gains heavily outweigh the losses.
Exactly.
And with First Mining Gold, it seems like there's a strong case for asymmetry here.
Yeah, I mean, there are definitely a few factors pointing in that direction.
Okay, well, let's talk about those factors then. Break them down for us. What makes you so confident about the asymmetry?
Okay, so first of all, their valuation is, incredibly low.
Right.
Compared to their peers, compared to their own historical performance.
Yeah.
The market seems to be really discounting their potential.
Yeah.
And that creates an opportunity, I think, for smart investors.
Right. That P/NAV of 0.1x is just, it's hard to ignore.
Yeah.
It really does seem like the market is saying that they're worth way less than they could be.
Exactly.
Okay. So what's the second factor?
Second, the projects.
Right.
Large, high grade, good jurisdictions. Those are valuable assets. Any major gold producer that wants to expand their reserves, they'd be interested in that.
And like we said, there's an appetite for acquisitions right now.
Oh yeah, absolutely.
So they're kind of in the right place at the right time.
Exactly.
Okay, what's the third factor?
Third, they're about to transition from development to production.
Right.
And as they get closer to generating revenue from these projects, their values should go up significantly.
Okay.
And this is all happening while the gold market itself looks like it's poised for growth.
Right. All these things kind of coming together at the same time.
So good timing, essentially.
Right. So they're about to start producing just as demand is expected to surge.
Exactly. Yeah. And that means higher profits, higher share price.
Right. Okay, so, I mean, all these factors together.
Yeah.
It really does seem like there's a strong case for asymmetry here.
I think so.
Yeah.
The potential upside driven by, an acquisition, rising gold prices, their own progress.
Yeah.
It seems like it really outweighs the downside risks.
Right. Obviously, there are risks associated with any investment.
Of course, yeah.
But in this case, it does seem like the rewards outweigh the risks, which is like the definition of asymmetry.
Exactly. And that's what makes First Mining Gold, such a compelling investment opportunity. They have this potential, to deliver really outsized returns, especially for investors who understand the dynamics of the gold market and the mining industry.
Right. So after considering all of this, what's your final verdict?
Yeah.
Is First Mining Gold an asymmetric investment opportunity in December 2024?
I mean, based on, all the evidence we've looked at, I would say yes.
Yeah.
First Mining Gold really does make a strong case for asymmetry. There are inherent risks, of course, like any investment.
Sure.
But the potential rewards here, they do seem disproportionately large.
Okay. That's a pretty strong statement.
Yeah.
I have to admit, I'm kind of leaning in the same direction.
Yeah.
The more we get into this, the more it seems like First Mining Gold could deliver, exceptional returns.
Yeah, I think so.
But obviously, it's super important for people to do their own research.
Oh, yeah, absolutely.
And carefully evaluate the company themselves before making any decisions.
Of course, yeah. This is just our analysis, right?
Right.
Based on the information that we've gathered.
Yeah.
It's not financial advice.
Right, exactly.
But, hopefully this deep dive has given your listeners, the information and the knowledge that they need.
The tools.
Yeah.
Yeah.
To make an informed decision.
Right.
About whether this is the right investment.
And even though, we've uncovered all this positive information,
right,
there's always more to learn.
Of course.
So encourage your listeners to keep researching.
Definitely.
To explore different perspectives.
Absolutely.
Before making any decisions.
Yeah.
Knowledge is power, especially when it comes to investing.
It really is.
So do your research, weigh the risks and rewards, and then decide if First Mining Gold is a company that you want to bet on.
Exactly. Yeah.
All right, so we've gone through all the details about First Mining Gold, their projects, their financials, and what the market's looking like.
Yeah.
But let's put ourselves in the shoes of a big gold producer for a second.
Okay.
You're looking to expand your reserves, and you see this company.
Right.
With all these promising assets trading at a discount.
Yeah.
What would you do?
I mean, if I were a major gold producer, and I had dwindling reserves, I'd be seriously considering making a move.
Yeah.
An acquisition, First Mining Gold's projects, especially Springpole.
Right.
I mean, that would be huge for any company's portfolio.
And with their valuation being so low, it seems like, you'd get a pretty good deal.
Exactly. I mean, it's all about seeing the value.
Yeah.
Where others maybe don't. Right.
That's what makes a successful investor.
Right. Or a successful acquirer.
Or acquirer, yeah.
Yeah. It's like, finding that hidden gem at a flea market.
Right.
It's worth more than they're asking.
Right.
Yeah. And in the gold market, it seems like those gems.
Yeah.
They're getting rarer and rarer.
Yeah, absolutely. As reserves get depleted,
right,
new discoveries are harder to find.
Right.
Those companies with those proven assets become even more valuable.
Okay, so we've done the research, we've analyzed all this data, we've even, put on our acquirer hat for a minute.
Right.
What's the bottom line for you here?
I mean, the bottom line is First Mining Gold is a really compelling asymmetric investment opportunity. The potential upside is so strong.
Yeah.
Driven by, that potential acquisition, the rising gold prices, and the fact that they're about to start producing.
Yeah.
The risks just seem smaller in comparison. Right. Yeah. I mean, I agree. Obviously, no guarantees when you invest in anything.
Of course. Yeah.
But based on everything we've talked about, it seems like First Mining Gold.
Yeah.
That'd be a really smart bet.
I think so.
Well,
especially for those investors who, they want to get exposure to gold.
Right.
And they're looking for those, potentially huge returns.
Exactly. It's about calculated risks, right? Mm-hmm. And recognizing the opportunities.
Yeah.
And First Mining Gold, it has that unique combination.
Right, right. Well, that's it for our deep dive into First Mining Gold. We've covered a lot, but ultimately the decision is yours.
Exactly. You've got the knowledge now.
Yeah.
Weigh those pros and cons.
Right.
Consider your own goals.
Yeah.
Your risk tolerance.
Yeah.
and then decide if it's right for you.
And remember, investing should never be a gamble. It's about making informed decisions.
For sure.
Based on solid research and careful analysis. And who knows?
Maybe first mining gold will be your golden ticket.